For more than 70 years, one currency has quietly ruled the world. The price is oil. It settles wars without soldiers. It decides which nations rise and which collapse. The US dollar. But today something strange is happening. Countries are trading without it. Central banks are selling it. Rivals are building alternatives. And trust, the one thing money cannot exist without, is quietly eroding. Here's the mystery. If the dollar is so dominant, if it still makes up nearly 90% of global forex transactions, if it remains the world's primary reserve currency, why does it feel like the ground beneath it is shifting? History tells us something unsettling. No global currency has ever lasted forever. Not the Roman denarius. Not the Spanish silver real. Not the British pound. Each collapse followed the same pattern: power, confidence, overreach, decline. So, the real question isn't if the dollar will lose its grip. The real question is, what happens to the global economy when it does? And more importantly, who pays the price? To understand the dollar's potential decline, we must first understand why it rose. Money is not just paper. It is belief enforced by power. Throughout history, global currencies shared three traits. 1. Economic dominance. 2. Military and political power. 3. Deep, trusted financial markets. The Roman Empire had legions. Spain had silver mines. Britain had trade routes and naval control. And in the 20th century, America had all three. But the dollar didn't become king by accident. It emerged from chaos. World War II changed everything. By 1944, Europe was in ruins. Factories destroyed. Currencies shattered. Gold reserves drained. Meanwhile, the United States stood untouched, holding over 70% of the world's gold. That year, 44 nations met in Bretton Woods, New Hampshire. The deal was simple, but revolutionary. The dollar would be backed by gold. Other currencies would be backed by the dollar. The US would anchor global stability. The dollar became as good as gold. But here's the hidden trade-off no one talked about. To supply the world with dollars, America had to run deficits. And deficits have consequences. The Nixon shock. By the late 1960s, cracks were forming. America was fighting Vietnam.